And we are on.
Oh,
How's my sound? Is it okay?
yeah.
Okay, so um, all right, so excited about today because I actually want to really discuss things that come up for me that I think will be common questions for others.
Yeah.
So one of the things that I noticed was you talked about Aurora Cannabis, and I don't know how I stumbled upon it because I wasn't playing it, but you had done in your top millennial videos that like Aurora Cannabis was the number one cannabis or the number one stock traded on Robinhood
Yeah.
for millennials.
Right.
So, and you have noted a couple times how you think it's just a trash stock, right?
Yes. Yes. 100%.
So I came across it and I noticed that it had a spike on the chart, and then it had a reverse stock split. And so I was wondering if you can explain to me. I mean, I understand in theory what a reverse stock split is, but if you can go into sort of why they did it, what sort of implications, if any, it typically has on a stock when there's a reverse stock split.
Yeah. So basically, what happened was that Aurora went through a 1-for-12 reverse split, meaning that for every 12 shares you owned, you now have one share. So if you have 24 shares after the reverse split, now you only have two, which means you had pretty much much smaller piece of the pie. So the
Mhm.
value of your position is no longer as valuable as it was before. And so, companies go through reverse splits for a lot of reasons. The main reason for Aurora Cannabis is mainly because, well, it could be for two things. One of the biggest reasons is they were priced below a dollar. So if you're priced below a dollar, that you have X amount of time to, and I can't remember what the number is, but you have X amount of time to basically get that price back up over a dollar or face delisting. So you'd be removed from NASDAQ. Well, one way to solve that is just to go through a reverse split. You see that all the time. A lot of the shipper companies that are full of debt and everything else do the same thing, and it's just a really crappy way to get yourself compliant again. The other reason is because they have a buttload of convertible debt. So they have on the books right now about $19 million worth of convertible debt, which means that um, let's just say you're the bank and I'm Aurora Cannabis and I need money. So but I don't have the means to actually pay you back because maybe I'm not generating enough revenue, or operating costs are too high and I can't really pay you back in cash. But I can give you a bunch of shares because my company is publicly traded. So you say, okay, well, I'll give you $500,000 if you give me 750 million shares of your company. And then so I would say, okay, that sounds good to me, but it's going to be in the form of convertible debt. So you have the ability to sell those shares whenever you want at whatever price you want so lots of times the par value of those shares are much lower than the price of the stock itself. And so, you know, uh, the banks or the loan the banks can basically sell those shares into the market, which in turn actually devalues your position again. So I think that what's going to be happening with Aurora is that they reverse split. The banks come in and start just dumping more shares into the float or the market, and then continues to diminish the value of your position, which is really crazy. It's a
Yeah.
terrible way to run your business publicly.
So you mentioned that when the company does a reverse split, it decreases the value of your position.
Yeah.
How is that so? Like, wouldn't it? I mean, I know on a per share basis, so your per share it actually goes up, right?
Mhm.
But
So think about this. This is probably a better way to explain it. Let's say you have 24 shares of Aurora Cannabis, which means for every dollar that moves, it's
yeah.
$24 back in your pocket, right?
Mhm.
Um, if you then only have two shares, for every dollar it moves, you're only getting $2.
Okay,
So that's
I
the
got you.
easiest way to probably explain that.
Gotcha. So conversely, when a stock splits, then that's technically a good thing then?
Well, it's a good thing for the company. So, it gives them the opportunity to basically sell more shares into the
No,
market.
I'm sorry. Like, so we're talking about a reverse split.
Yeah.
So like the opposite of that would just be a regular split, right?
Will be a forward split. So
Okay.
basically, so let's just say it was the inverse. So you have one share and it was a 1 for 12 forward split. So for every one share you own, you then get 12, which is great
Yeah.
because, you get to have more and, the stock goes up, you get to be able to make more money because you have more shares.
I think I remember years ago, like Apple had done like a 7-1 forward split. Would a company do that to just decrease, or I guess to make the per share value lower for more people to buy it? Is that
Yep,
why they would
that's
do that?
exactly right. That's exactly right. So the purpose of a forward split is to essentially make it, and there's a
More
lot of
affordable.
reasons, but more affordable, right? So, um, you know, if for whatever reason Amazon wanted to make their stock more affordable to people, maybe just beginner traders or maybe who didn't want to spend, $2,500 on one share, they would do a forward split, maybe bringing it down to $100 or $200 a share, so that more people could buy more Amazon stock.
Gotcha. So is it normal, going back to Aurora and the 1 to 12 split? Is it normal for the stock to go up right after it? Like, is that a normal
So, so
reaction?
yeah, so it's not actually normal. It can be, but the reason this happened was they timed it very, very well. And this is where you have to really be careful with a lot of these penny stocks because technically Aurora was a penny stock before it decided to reverse split. And even after the split, it was still technically a penny stock. But um, you know, they did the split and then coming came out with earnings representing a really nice uptick in revenue, and so that got a lot of people excited. And so it's post split, so the share structure is much smaller than it was before, so it could move a lot easier. So then you have a lot of money coming in after the split happened, and that's what's driving the price up right now. But eventually, the same wash, rinse, repeat's all going to happen, and the stock's going to get whittled back down to probably below $5 sooner rather than later, I would imagine.
Okay. The
So
last
like
thing I
they
want
just strategically did that. I have to believe that they did the split knowing what kind of numbers they were going to have, so people would put more money into their company just so they could dump more shares on it. It's terrible.
to
It really is. It's awful.
so I want to real quick look at the chart, and just to make sure I'm clear, and I mentioned this to you before. I don't know if the hour is, I'm just have it on the hour right now. If you want
Yeah.
me to change it, I can. So we're looking at, so so then the split happened on May 11th.
Hmm.
And so beforehand, it's adjusted for the split, right? So beforehand, even though right here it says 834, it actually wasn't. But does the chart retroactively adjust to what the
Yes.
split would have been?
Yeah.
Okay,
Yeah. Before it was
gotcha.
below a dollar. I mean, it was like 30 some cents, something like that.
So it's kind of manipulation in a way, because somebody could look at the stock, and I mean, if you don't really know what a reverse split is, which I had no idea, you can look at the stock gap up and be like, oh, this stock is doing well. Earnings look like it
Yeah.
performed. And so it's almost like kind of tricking people to think that it's like artificially, like, pumping it up.
Yeah.
Is
Yeah, well, I mean, there's all kinds of manipulation going on with this stock, in my opinion. Um, and yeah, I mean, I don't know if it was a legitimate company or maybe like some sort of ETF. Like we saw JNUG went through a split. I don't know, a couple months ago, and that's not something where I'd be like, oh, it's being super manipulated or anything like that. That's just JNUG being JNUG. Whereas like something like Aurora, when it already has a bunch of issues, $19 million in convertible debt is crazy. Um, I probably should clarify. It's $19 million Canadian. I don't know what the conversion is on that, but still a ton of money. And
Yeah.
they've also had like accounting issues. There's some accuracy issues on their accounting side of things, and then they laid off almost half their employees. So they're just not in a good way.
The last question I have is regarding delisting. So you said if it's under $1, it's at risk of being delisted
Yeah.
to the OTCs. How long? Like, is there a time frame that it has to be under $1, or what is the point at which it would be delisted?
Yeah, so that's a really great question. I don't remember off the top of my head what the time frame is. I think it's 90 days. I want to say it's a quarter.
Okay.
So if they don't get the price up within 90 days, then they will face, delisting. There's a lot of other reasons that they would get delisted, but that's one biggie.
Okay. Cool. Thanks, Coach. Appreciate you.
Yeah, no problem.
All right.